Opinions expressed herein are subject to change and not necessarily the opinion of the firm. Past performance is no guarantee of future results. The information presented herein is for informational purposes only and is not intended to provide personal investment advice. It is important that you consider your tolerance for risk and investment goals when making investment decisions. Investing in securities does involve risk and the potential of losing money. The material does not constitute research, investment advice, or trade recommendations.
And now introducing Mr. Keith Lanton.
Good morning, it's Keith. Get started today, Columbus Day, October 12th, 2020. Lots to talk about here as we enter the second week of October, less than 4 weeks to Election Day, 3 weeks and a day, I believe. So headlines certainly going to be filled with lots of talk with respect to the election, what that means for not only investors but for the United States as a whole, as well as we approach this critical time of the year, discussions on Supreme Court nominee and upcoming debates, and discussions on whether or not we will see a stimulus, or if we don't see one, what that means, or if we see one post-election. So Barron's talked a lot about that. There are also many analysts opining on stimulus and the implications for the economy, and we'll talk some more about that as well. This morning, going to talk first about some quotes from Sir Winston Churchill, and then we'll talk about financial markets, and we'll talk about Barron's and what they have to say with respect to the market last week and some of their opinions on markets going forward. And then we'll talk about a few individual companies. So I mentioned earlier Columbus Day today. That means that bond markets are closed today, and the stock markets today are obviously open. So Winston Churchill, arguably perhaps the most influential figure of the last 100 years. Some credit him with leading Great Britain and keeping them with their chins up and staying in World War II until he could influence the United States to join the cause against the Germans and the Nazis, and we know the result that ultimately took place on the European continent. So some quotes from Winston Churchill that still relevant today. Some of them talk about politics, and even though they were said 75 to 100 years ago, it's amazing how relevant they still are today. So speaking about some of the political commentary from Sir Winston Churchill, talk about some of his quotes. A lie gets halfway around the world before the truth has a chance to get its pants on. Once in a while you will stumble upon the truth, but most of us manage to pick ourselves up and hurry along as if nothing had happened. Moving on to some quotes talking about capitalism and business. We make a living by what we get, but we make a life by what we give. There is no such thing as a good tax. The inherent vice of capitalism is the unequal sharing of blessings. The inherent virtue of socialism is the equal sharing of miseries. We contend that for a nation to tax itself into prosperity is like a man standing in a bucket and trying to lift himself up by the handle. On regulation, if you have 10,000 regulations, you destroy all respect for the law. And a few other quotes on different topics. This one having to do with Hitler. An appeaser is one who feeds a crocodile, hoping it will eat him last. This one, which some say was Churchill, some say perhaps not, but nevertheless meaningful, inspirational quote. If you're going through hell, keep going. You have enemies? Good. That means you've stood up for something sometime in your life. A fanatic is one who can't change his mind and won't change the subject. This one thought was very thought-provoking. The farther backward you can look, the farther forward you are likely to see. A pessimist sees the difficulty in every opportunity. An optimist sees the opportunity in every difficulty. To improve is to change. To be perfect is to change often. And last one, politics is the ability to foretell what is going to happen tomorrow, next week, next month, and next year, and to have the ability afterwards to explain why it didn't happen. So moving on to this morning and the news, we're seeing futures this morning approaching the highest levels of the morning. Dow futures are up about 113. NASDAQ futures are up about 200 points. S&P futures are up 28, and the Russell futures are up about 11 points this morning. This is on some speculation with respect to stimulus. Markets believing that eventually something will get done. Over the weekend, House Speaker Nancy Pelosi said the $1.8 million stimulus offer from the White House was inadequate, while Senate Republicans strongly denounced the bill as being too expensive. That was according to the New York Times. Nevertheless, despite the rhetoric, markets believing that something will get done, if not necessarily in the next few weeks, then regardless of who were to win the election, markets are speculating that something will get done post-election day. Separately this week, we will feature the start of third quarter earnings season. See lots of earnings tomorrow. We'll talk about that. And tomorrow, Apple is going to be kicking off an iPhone event, and that will feature some of the new phones and 5G speeds. We'll also talk a little bit more about that. Also this week, many of the large financial and healthcare companies will be the companies starting to report this week. I mentioned the Treasury market is closed for Columbus Day, dollar slightly higher. We are seeing oil down about 60 cents a barrel, down about 1.43%. Interestingly, natural gas is up over 5% this morning. Gold is up $2 an ounce. Silver up a few cents as well. Overseas markets, we saw strength, particularly in China, where markets were up 2.6% in the Shanghai. The Hang Seng was up over 2%, 2.2%. India, South Korea, Australia, all moderately higher. The Nikkei in Japan, moderately lower. European markets, by and large, to the upside, about 0.3%. The big news out of China, perhaps contributing to the strong upward move there, is the People's Bank of China lowered the foreign exchange reserve risk ratio for forward transactions to 0 from 20%. That is viewed as a stimulus, and markets viewed it favorably. Some reports with respect to the election and what we have going on this week. We have the Supreme Court confirmation hearings for nominee Amy Coney Barrett beginning today. Also, some talk that if those hearings are concluded this week, that perhaps in the next week or two there could be a Senate vote. The presidential debate that was scheduled between President Trump and Joe Biden, which was scheduled for this week, is officially been canceled. But the October 22nd debate will proceed as scheduled. Joe Biden and President Trump will likely each hold separate town halls on ABC and NBC, respectively, on Thursday. Reports that if Joe Biden were to win the election, he could choose Andrew Cuomo as Attorney General, that being reported by Axios. Amazon's Prime Day is going to begin tonight at midnight. Apple was victorious in their litigation where Epic Games was seeking to force Apple to make some concessions with respect to Fortnite on its App Store, and Fortnite was Epic and Fortnite were not successful, at least from this most recent ruling from a judge. Apple reportedly is going to start using its retail stores as a distribution center for shipping products to consumers. A couple of analyst comments this morning. Ford was upgraded to buy from hold at benchmark. $10 target. Pepsi upgraded to buy from neutral at Citigroup. They raised their target on Pepsi to $169. Cisco CSCO was downgraded to neutral from buy at Citigroup. Target lowered to 43. Pfizer was downgraded to neutral from overweight at Atlantic Equities. They lowered their target to 39. And today, the recent hot IPO Snowflake, symbol SNOW, SNOW, was initiated by numerous firms with various price targets after the very heated IPO that company had a few weeks ago. Interestingly, if you're looking at European markets, if you remember just a few years ago, there was lots of concern about some of the southern economies in Europe, Italy, Greece, Spain, and this morning we see, with not much fanfare, but nevertheless significant, that the yield on the Italian 30-year bond has hit a record low. And this is as yields in Spain and Greece have declined significantly. If you remember the talk about Greece potentially exiting the European Union, possibly a failed economy, and now we're looking at 10-year yields on Greek bonds under 1%. General Motors reporting that their sales in China grew for the first time in 2 years in the July to September quarter. This is on the strength of the Cadillac and Buick brands. And Mallinckrodt, which was one of the companies tied up in opioid litigation at one point, was a high-flying pharmaceutical stock, filed for bankruptcy protection amid opioid litigation. Astrazeneca in the news. The U.S. government has awarded $486 million to AstraZeneca to develop and secure supplies of up to 100,000 doses of a COVID-19 antibody treatment that is similar to the monoclonal antibody treatment that President Trump received from Regeneron. Regeneron CEO out over the weekend talking about their monoclonal antibody, saying that President Trump is a study of one person and that further study on their drug is necessary before it can be rolled out in a more robust fashion. Goldman Sachs in the news saying that their financial targets may be difficult to achieve as the pandemic slows some of their business lines. Twilio, symbol TWLO, in the news, buying a Segment for $3.2 billion. I mentioned Apple, something to look forward to tomorrow, Tuesday, October 13th. Apple is going to be unveiling some new 5G iPhones. The feeling is that the technology built into these phones will be ahead of the ability of the infrastructure to supply the high speeds. Nevertheless, phones will have the built-in capability, so as the wireless carriers build out their networks, these iPhones will be able to deliver these high speeds if you own their phones. The expectation is that the iPhone 12, the new iPhones that Apple is expected to launch tomorrow, could go on sale the weekend of October 23rd to 25th. That would provide 10 weeks of sales in the December quarter, but only a week of sales before Apple announces its September quarter earnings on October 9th, making it a little bit more challenging for analysts to do their job and try and figure out what Apple's sales and earnings will be in that quarter. Investors expect 2 iPhone 12s and 2 iPhone 12 Pro models. The 2 higher-end versions will have 3 back cameras and a 3D LiDAR sensor that could have augmented reality applications and support new games and use cases. It's also expected that Apple will be making some improvements to the AirPods Studio headphones that are going to be launched soon, and expectations are that there will be possibly details on ARM processor-based Macs and discounted service bundles for new iPhone buyers. Besides the Apple event tomorrow, we're going to get lots of earnings from banks. 2 of the largest banks by assets, Citigroup and JP Morgan, reporting earnings. And then we get the other 2 of the top 4 banks, Bank of America and Wells Fargo, reporting earnings the next day on Wednesday. Tomorrow we also get quarterly results from BlackRock, Delta Airlines, and Johnson & Johnson, to name a few. Also on Tuesday we get the Consumer Price Index for September. Expectations are for a 1.4% year-over-year rise. If you factor out food and energy and look at the core, that's seen being up 1.8%, roughly in line with the previous month. Wednesday, other companies reporting earnings include Goldman Sachs, United Healthcare, United Airlines. Also, we get the Producer Price Index, the PPI following the CPI. That's expected to take up 0.2% month over month. Core also expected to rise 0.2%. Thursday, earnings from Morgan Stanley, Truist, which is the result of the combination of BB&T and SunTrust, reporting earnings Thursday. Also, Walgreens will be reporting earnings Thursday. We get weekly jobless claims on Thursday, and then Friday we get some more earnings from Bank of New York Mellon, Schlumberger, State Street. We get the University of Michigan releasing consumer sentiment, and then we get retail sales for September, and expectations are there for a rise of 0.8%. Moving on to Barron's. Barron's talking a lot about the strong market movement last week. Recap, Dow up 3.3% last week, second consecutive weekly gain. The S&P was up 3.8% last week. NASDAQ up 4.6%, and perhaps even more surprising, the small company Russell 2000 was up 6.4% last week. So what's causing the rise? Barron said one answer is a possible stimulus package, which we talked about, getting much of the credit. Obviously, the market would love to see a bill get passed. We had Fed Chair Jerome Powell continuing to call for the government to act. Initially, President Trump said negotiations were off. Then he said he'd be open to a small one-off deal. And now he is going bolder. So all that taking place. Barron saying perhaps what gave the markets the most optimism last week, on top of the stimulus and just their general expectation that stimulus will get passed sort of regardless of the political outcome, is more promising COVID-19 treatments. We saw the effect on President Trump of the monoclonal antibody from Regeneron, although he was given some other drugs as well, so hard to isolate. But nevertheless, we got promising results last week from an article in the New England Journal of Medicine regarding Gilead's remdesivir. Eli Lilly had some very positive announcements on their coronavirus cocktail, and this morning we're getting some positive news on Astrazeneca. Perhaps most significantly last week is we saw the market breadth improve significantly. The Invesco S&P 500 equal weight exchange-traded fund has now risen more than 13% in the past 3 months, and that's versus the S&P 500's 10% rise over the same period. So this isn't just the FANG stocks that's leading the markets higher. In fact, the market rally has broadened out so much that future gains look likely if history is a judge. The reason, Barron's explains, is the S&P 500 has just experienced a breadth thrust. What is a breadth thrust? It's a term to describe a 10-day period in which advancing stocks outnumber decliners by 2 to 1. That doesn't happen very often. In the last 30 years, it's happened just 29 times, and it signals massive buying pressure in the market. When a breadth thrust occurs, the S&P 500 has been higher 12 months later, 96% of the time, for an average gain of 13%. Of course, higher in a year is different than higher next week. While breadth thrusts point to a higher market in the future, they are often followed by short-term drops. Barron's also talked about how nothing is worrying the stock market, not even a possible tax hike, as the polling numbers continue to favor a possibility of a President Biden, although Barron's is careful to point out that nobody has forgotten at this time 4 years ago, the polls in the betting markets confidently were predicting that Hillary Clinton would cruise to an easy victory, and a lot can happen in the next 3.5 weeks. Nevertheless, if you are speculating that the polls are correct, what that would mean is the strong possibility of a tax and rise in taxes, and in particular a rise in capital gains taxes. And if you look at the Biden plan, it's possible that the highest rate for capital gains could go from current 23.8% to 43.4%, and that's just federal. It doesn't include any state and local taxes, which would be taxed on top of that. So historically, what would a rise in capital gains taxes mean? It would mean that based on the history of previous capital gains tax hikes in 1986 and 2012, J.P. Morgan analysts wrote in a research note that U.S. equity prices could suffer about 5%. Although this study went on to say the longer-term effects of capital gains tax rates are mixed, and most economic models don't show a large impact on economic growth or on stock market performance over a longer period of time. One segment of the market that is starting to price in a deal in Washington is the bond market. The long end of the Treasury market saw a rise in yields last week. 30-year is up to 1.57%. That's a 4-month high. The market for tips is pointing to rising inflation expectations. And now tips are pricing in expectations of a 1.85% inflation rate. That's the highest in September of 2019. Just 15 basis points away from the 2% target the Fed is aiming for. And what's perhaps most interesting is last week that uptick in yields elicited a flood of inflows into fixed income funds. Perhaps this coming predominantly from institutions or quote-unquote smart money. But last week we saw $25.9 billion of inflows into fixed income funds. That is the second biggest total on record. And if you want to get a point of reference to how big that is, $25.9 billion last week going into bond funds. And in a week of a very strong equity performance, we saw $4.4 billion going into equity funds. So almost $26 billion versus $4.5 billion into stocks. Barron's headline article talked about where to look for opportunities in the next 10 years, and they suggest taking a look at industrial stocks, which they say are getting ready for 10 years of outperformance, and they discuss some stocks to consider if you agree with their thesis. Article starts out talking about if you were to go visit a mine these days, there's a good chance you would find Caterpillar's 797F tractor. And this tractor truck stands 25 feet high, weighs about 290 tons, and comes with features that would make Tesla co-founder Elon Musk proud. It can operate itself. Barron says watching these enormous trucks without drivers as they navigate open-pit mines resembles an alien landscape from science fiction. Caterpillar can bill up to $5 million for one of these automated trucks and then can charge more for software and data collection from these vehicles. Point here is that technology is not just about tech stocks, and industrial companies stand to benefit as they stand on the shoulders of the giants in the technology space that have opened up the opportunities to the industrial space. And Barron's point is that as the technology advances, it slowly creeps down into the industrial space, and once it reaches the point that you reach critical mass, the industrial companies can start utilizing this technology and start getting real operating leverage from the use of this technology, and are able to increase their profitability as a result of building in technology and now building in rebillables, as Caterpillar is doing as they create these software updates and data collection. At the same time, another thesis going on within these industrials is a shift toward renewable energy and electric vehicles, which is providing the catalyst for companies with electrification technologies. These companies, they suggest taking a look at are Quanta Services, PWR, and Eaton, ETN. These companies have been under pressure as they have had significant portions of their business dedicated to servicing the traditional fossil fuels. And now that they are able to pivot and embed new technology into their products, they are refocusing on the renewable energy and the electrical vehicle space. And they feel that will compensate for the lost sales in the fossil fuel space. If you go back and look at history, you'll see that there are periods, usually decades long, when tech outperforms, and then the following decade you see industrials outperform. Most recent example was in the 1990s, where tech was on a tear, and then between 2000 and 2010 we've seen industrials come to the forefront and outperform technology. Then between 2010 and 2020 it was technology's turn, and Barron's is suggesting that perhaps it's industrial's turn to outperform. So some of the theses behind some of these stocks, one of which is mentioned, is a French company, Schneider Electric, which trades in France. It's a $71 billion maker of electrical and automation products based just outside of Paris. And what they have is products that cater to the solar energy space. They make residential circuit breakers to allow low voltage transformers, which power inverters, which basically what they do is they turn direct current from solar energy, DC, into alternating current, AC, used by modern electrical equipment. They also suggest taking a look at Eaton, symbol ETN, which also makes circuit breakers and transformers, and they therefore benefit from the rise of electrification and automation. Caterpillar, previously mentioned. Finally, two more, Quanta Services, symbol PWR. They build electrical infrastructure and other products. They have been helped by the their move to renewable energy. Their revenue from electric power construction makes up 59%, or about $7 billion in sales. Some analysts speculate that over the next 4 or 5 years, that number could go to $10 billion. CEO Duke Austin told Barron's, "Look at business and investor sentiment around carbon-free and technology. We are enabling those things." And then the final company that they mentioned is Rockwell Automation, symbol ROK. That stock is not cheap at 30 times earnings, but Rockwell is the largest pure-play industrial automation company in the world. They specialize in discrete automation, which is things like robots on an assembly line, as well as process automation, which is things like managing continuous operations on a food production line. Going to mention a couple of other companies. Brad's not going to be joining us this morning as the bond markets are closed. Barron's did write up favorably Alliance Bernstein. Symbol is AB, like the alphabet, AB. Barron's saying that Alliance Bernstein, which is an asset manager, is a company that is thriving in a space that's suddenly become a hot commodity or a hot property on Wall Street, as we saw last week, Eaton Vance getting gobbled up by Morgan Stanley. Previously, we'd seen Norman Pels take activist interest in Janus Henderson and Invesco, and Barron's suggesting that Alliance Bernstein perhaps could be the best way to play the asset management space, saying it offers a growth story and nearly a 9% yield. That yield being the result of it being a legacy structure as a REIT, where they pass on their earnings to shareholders. That 9% yield is not a fixed rate. It's based on the profitability of the company. What's interesting about Alliance Bernstein is it's only got 35% of its shares in the public float. The other 65% is owned by Equitable Holdings, symbol EQH. The stock trades at around 11 times projected 2020 earnings, and some speculate that perhaps Equitable would be interested in purchasing the balance of Alliance Bernstein and owning it outright instead of 65%, 100%. That's not the only thesis, though, on the stock. Analysts talking about Alliance Bernstein saying that it's trading more like sluggish peers like Invesco and Franklin Resources, rather than higher growth companies like BlackRock and T. Rowe Price, even though Alliance Bernstein is looking more like the faster growers and not like the companies that are losing assets. Inflows into Alliance Bernstein have been growing at 4% annually since 2017. If you look at the asset management space as a whole, they've been experiencing outflows of roughly 6%, so significantly outperforming. Again, the symbol there is AB. That's everything I've got.
Thank you for listening to Mr. Keith Lanton. For more podcasts, please visit our website, www.lanternwa.com.